We have Jesus and Russ is also commenting.
Oh, I'm not. They're not showing up for me. So you read them.
Yeah. So first is Jesus. Jesus. The inflation came from corporations raising prices just because they could. Combined with
That is another factor. Yes.
for sure.
Yeah.
Combined with people overpaying for homes and cars, which usually are people's biggest expenses. Yes. So corporations set the prices of goods and services, no question. And when they can, they will raise the prices. So that's what they did. Also, there's a paper that Randy Ray wrote about inflation. It's an amazing paper where he goes through the orthodox approach to inflation and then the post-Keynesian MMT approach. And I keep wanting to delve into that paper one of these days. But it's very esoteric and very lengthy, so I'm trying to figure out which.
Well, maybe we'll hit it when we go through this PowerPoint.
Yeah, I think
there's
maybe
some good, juicy stuff in this PowerPoint.
But he talks a lot about why do we have prices, right? So this is kind of important in inflation discussion is what is even the point of price? Why do we have prices? And it goes into how the neoclassical and the Austrian approach, the barter approach, it has it kind of fundamentally wrong. And so if you have the fundamentally wrong approach about prices, then you're going to have some problems in the rest of your theory. But he talks about how prices are a tool for economic units to accumulate surpluses. Those can be businesses, those can be workers, those can be farmers, laborers, bankers, and there's this constant tug of war in the economy between different interest groups who want to raise the level of prices that they demand for their goods and services. There's corporations who want to always raise their prices. There's workers who
want to make
always
as much money as we can. Yeah, and sorry to interrupt your line of thought. A price raise, if it doesn't change your number of customers, goes straight to the bottom line because you didn't add any expenses to go along with that price raise. You just raise prices, and then your gross income goes up, but your net income goes up by whatever that price raise is. Sorry. I'm just trying to describe how attractive it is for a corporation to raise prices, keeping everything else the same.
Absolutely. I mean, the corporations are constantly serving the market, right? Have their feelers out. Can we hike it up a little bit? Can we get up? Let's test it out a little bit. Okay, no complaints. Okay, test it. I mean, I know that too from clients that I work with, right? To raise it a little bit, see if people complain. Yeah, of course they complain, but they still buy. Okay, let's keep pushing as far as we can. And then there's labor too, and labor unions and all that, so
for wages, yeah. And then
wages.
If your wages go up, that's the biggest expense, and then you have to raise prices.
Right.
Yep.
So then there's this constant tug of war between labor, capital, farmers. They want to raise the food prices, right? Bankers want to raise their loan interest, the risk premium that they earn on the loan interest. So there's this constant tug of war between different interest groups, and prices are a mechanism to maximize inflows and actually then in turn maximize profits, which enables you to get more loans. So this is actually something that neoclassical and Austrian theory doesn't think about a lot, but post-Keynesians and MMTers think about a lot. Actually, this is the constant cycle of a business is try to raise your prices, sell your products, obviously create value also and all that, but try to raise your prices, raise your profit margins, and the profit margin enables you to get more loans so you can expand your business, so you can get more market power, right? So this is the reality of the corporate world. Look at the mega corporations today who occupy, like, I don't know, the Magnificent Seven. They make up a significant portion of the S&P 500 at this point. These are companies like Apple, Google, Amazon, maybe, but definitely Apple, Google, Nvidia, obviously, because everyone's using AI now, right? So Nvidia's up there. Microsoft. These are products that we all use, we all interact with. So it kind of makes sense that these companies are so huge, and they're also very profitable. These are not the dot-com days, right? So there's no dot-com bubble forming with these companies. These are profit generation machines. And so, um, but what do they do with the profit? Like, they get more investors to invest in their business. They sell more stock. They get more corporate loans. They issue more bonds. Look at MicroStrategy. MicroStrategy buys Bitcoins, and then Bitcoin price goes up. And with the Bitcoin price having gone up, they have more collateral to borrow against. So they issue more stocks and corporate debt to buy more Bitcoin, and so on and so forth. Obviously, a big disaster is going to happen one day here, but
If there's, you mean if there's a dip in the Bitcoin price?
yes,
Yeah.
or not. Maybe just pick the exact perfect moment to do it, and it's all going to be fine. But it is a gamble to some extent. But then there's other companies, the ones I mentioned earlier. They're doing it based on profitability, so there's more fundamentals backing what they're doing. But yeah, definitely this constant tug of war makes it so that price levels just always kind of go up, right? It's like a normal situation for a capitalist economy with these special interest groups always trying to push a price up. There's nobody who ever goes, hey, why don't we um, ask for lower wages so that then we can have deflation so that we can buy cheaper jeans later on.
Right. Right. Yeah. That's the. I'm
Because
actually
this
trying to think of an example of an interest group that would want prices lower. I mean that's in control. Obviously, the consumer wants to lower prices, but other than choosing what they're going to buy, they don't have control over those
but the
prices.
consumer wants higher wages too, right?
Yes.
Um, so the only possible compromise appears to be that okay, prices have to keep going up continuously to some extent, and every one of these groups wants to grab a slice of that, right? Grab a
Well,
slice
I
of
can
that.
think of one deflationary pressure, which is to say, if a new technology comes out that says, "Hey, it cost $10 to make this before, now we can make it at $1, and we can undercut all the competition from before." That's the
Yeah,
one thing I could think of
for sure.
that'll deflate prices. Yeah.
AI automation.
Hmm.
Um, Although it doesn't seem to have happened yet, right? Because it creates new opportunities as well. There was an article recently somewhere about how IBM replaced their support workforce of I think something like 1,500 people, and their support satisfaction score went up from something like -30 to +70. I guess it's kind of a more positive versus negative. The
Right.
net positive is negative. So their score went up after they replaced all their support people with AI support. I mean, I'm just just trying to
That's
express.
hilarious because I'm infuriated when I talk to an AI
Yeah,
because I'm like, I know you can't answer my question. Just give me the representative.
but they're getting better, right? So there are
Okay.
some that can do that. And then once we get into AI agents, it's all going to get even crazier. Who,
Hmm.
who can actually perform activities and actions, but amazing, right? -30 to +70 or something like that, from replacing your entire support workforce with AI. But they had to rehire 1,500 people to
To
support
manage
the
the
AI
AI.
system. Yeah. So that's an aspect that's important, I think. So yeah, we're always gonna have this net inflationary pressure in the economy, I think. And then there's other aspects that I read a little while ago also. For example, there are professions, right? Because profitability and worker productivity goes up over time, the more the economy becomes capitalized, right? The more
Hmm.
automation, the more computers, the more machinery, we get more output per labor input. But there are some professions where this will never be the case, right? The violinist will never become more efficient
Yeah,
from
he'll never play two violins at the same time.
right. The barber will never cut the five people's hairs. What maybe there's going to be robots one day doing this, but
Right.
for the time being, there are certain professions where okay, so we're going to keep them. We're going to keep their earnings at 1880 levels, while everyone else is made more. Then they can't exist, right? These
Right.
professions couldn't exist then, and then we couldn't get a haircut. So that's another kind of interesting aspect that I read that maybe it's just a corollary of all of this, but definitely this tug of war of prices constantly going up and people constantly trying to maximize inflows, minimize outflows, creates this tug of war that it creates the baseline for inflation, and it uses the proper purpose of a price mechanism, of what the actual price mechanism is, to explain all of this. Because the neoclassical model thinks of the price mechanism as an auction
That's
vector,
happening all the time with everything, right?
permanent auction, right? So it's this an imaginary system, because when you go to Walmart and you buy a stepping stool or this, you don't have an auctioneer standing there. Oh, can you 500, 600? Not how this works. Right? There are so the auction price mechanism does exist in an auction, but in the corporate world, the price mechanism is a little different. Prices are more top-down administered, and they are administered before the business even starts producing goods. Because in order to get a loan, the business needs to have an idea of what the price for its product and service is going to be, and pitch that to the bank or the shareholders where they're getting the money from, right? So prices are incredibly important single variable that can make or break things for a business. You can't sell at a certain price; they may have to shut the whole thing down. And not, in the neoclassical Keynesian sense. Oh, the jeans become cheaper now. It's all
Yeah, right. Because I mean, as someone with employees, like, okay, let's say the price of the good or the service goes down to the point where, okay, we either need to lay people off or we need to start paying them less. And so, hey, employee A, you've been working great. You're making $20 an hour, but guess what? Good news. Things have deflated. So your purchasing power is stronger. So we're going to go from $20 an hour to $15 an hour. Does that sound good to you? Like, they don't care.
right.
Like,
Yeah,
are you crazy? No.
this can only happen in a severe recession or a depression. Otherwise, in normal conditions, this will never happen. This is why in normal conditions we have a bias towards net aggregate price increases in a capitalist economy, which is an economy with prices, essentially.
One thing I want to mention in terms of corporations dictating prices, like Jesus pointed out, is this idea of price gouging. Because I don't know what the neoclassical view is, but I know in the Austrian view, they say, well, there's actually no such thing as price gouging because of this constant auction system. When you have an emergency, let's say there's a hurricane and, for a week, everything's shut down, and you say, okay, well, gas is supposed to be $4 a gallon, but you got it here as $20 a gallon. You're price gouging because people need this. And the Austrians come back and say, no. What that gas station is doing is he's valuing a limited resource, because if he keeps it at $4 a gallon, it's just going to be bought up and nobody gets any gas. Versus if he puts it at 20, the resource will only be allocated to to the point where it's really, really in need, right? Now, I don't want to throw out that reasoning because again, I believe there is a pressure of that's true, but at the same time, you can't point at that and say, therefore, there's nobody greedy who's trying to take advantage of people in an emergency situation, right? If everybody who's watching this now or recording could like, share, and subscribe it helps us out a lot.
Yeah.
I hate saying it, but it's just true.